Hi there, welcome to your Durham Region Market Watch for January 2021, where I will take a closer look at two main indicators from the real estate market over the past year of 2020, what that might mean for the local market here in Durham currently and also moving forward. My name is Steve Stavriv from Century 21 Innovative Realty and Team Stavriv Real Estate. As always, in the blog that accompanies this video, I will list more of the statistics from the monthly report or the annual report, and they'll be listed below. That will include the average sale price, the number of sales, the current months of inventory of houses on the market. But today I just wanted to focus on two stats that I found interesting looking over the entire year, and kind of give us an indication of where we might be heading or where we currently are. So those two are the first one is called the sales to new listings ratio. It's exactly as it sounds. So you take the number of sales in any particular month divided by the new listings for that month, and you come up with a percentage. So the lower numbers typically would mean that there's more houses on the market. So if you're in the really low numbers, that would indicate a buyer's market. So there's more houses for sale than there are houses being bought. When you get into the higher numbers, that typically means there are more buyers than sellers. So the houses, as soon as they're getting listed, they're getting bought fairly quickly. The second indicator is called the sales price to list price ratio. Again, pretty straightforward. We're more familiar with this one. In a lot of realtor marketing, for example, you'll see, sold for over asking, sold for 105% or whatever. That's this ratio. So it's the sold price versus the list price. And again, you can see the trend that's happening here. So I just want to dive into that a little bit deeper. So in the beginning of the year, we sort of followed 2019. We had a strong end to 2019, but in a typical slowing down in the wintertime type of scenario. And then January of last year, 2020, it started to pick up. And we did see a lot of sales going on and a lot of multiple bids going on for certain price ranges of properties. And you can see that's evident over here in the sale price to list price ratio. So it went from 99%, which is from 2019, kind of carried over, and then it increased to 102%. So that's what I was talking about. That's where we got some of those multiple bids going on and that sort of thing. And in March, with the pandemic kind of increasing here in North America, we had the shutdown, and pretty much a lot of real estate stopped. So buyers jumped out of the market. They were scared. Sellers, obviously, for obvious reasons, they didn't want to sell their home at that time. So everything pretty much stopped for a short time, and then it resumed. So you can see in the sales to new listings ratio, it sort of dipped here in March and April, and then from April it sort of took off like a rocket. So we see here the sales month over month kind of increased until you hit sort of the 80 percentile range over here. So what that means is for every 8 buyers, there were 10 houses on the market. So that's what this number represents here. So they're in this sort of area. So you were still getting more houses on the market than those being bought. So, but it was getting tighter and tighter and tighter. And then what we see here is a huge jump in the last couple months. So in November and December, this ratio flipped. So meaning there are more sales than, once you hit 100%, there are more sales than there are houses being listed. So this is kind of danger territory over here. When we start seeing this sort of number, that indicates the inventory is getting extremely low. There's not enough sellers, not enough houses to supply all the buyers that are in the market. There's a number of reasons for that. Interest rates being one, just pent up demand being another. Without the pandemic, we would have had, some of this being taken care of in these couple months, or these couple months, whatever. But you can see as the year went on, after this, we go down, and this is going up and up and up and up and up and up. So the sales price keeps rising because there's not enough inventory in the market. So this is danger. We will probably never get to a point where there's no houses on the market. It's always fluctuating. However, right now we're in dire need of inventory for the market to supply all the buyers that are out there looking for houses. So that's one thing. The obvious question from here, if you are going to sell your home, is what to do next, right? So you can sell and you will get top dollar and probably more than top dollar for your home at the moment. But there is that scenario where, how do you buy in this market? So there are a number of strategies we can talk about, and I do outline some of them in my blog. But if you want more information on that, please contact me directly, because there's a few nuances depending on your area. But just quickly, you can, you can rent temporarily. You can move into a temporary home, which is almost the same thing, but not exactly. You can pick up an assignment. You can move to a different area, or you can also potentially pick up an assignment of a pre-construction home. So there's a few different options for you if you're scared about finding a home in this sort of market. But typically, what we're reaching out today to do is to see if there's more sellers to supply some of these buyers. We have a number of buyers in our database that are looking for homes but haven't been able to find one, or are being outbid by somebody else, right? So that's very important. So that's it for me today. Please take a look at the rest of the blog. It's very informative. If you have any questions, hit me up on email or text, and we can schedule a time to meet virtually or over the phone. Okay. Thanks again. Stay safe out there and take care.